The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, the wheat markets got a nice rally on the day Thursday. While row crops were mixed to lower, we saw some new contract lows even reached in new crop quarter beans, it looked like, or close to it anyway. So the livestock trade as well, kind of a mixed bag there. So wheat was really the star. We got end of the month, end of the quarter, USDA reports all in front of us on Friday. Let's talk about it. Joining us now for market analysis, Brian Doherty with Total Farm Marketing is with us here. Brian, thanks for joining us today. Always good to catch up with you. And man, oh man, I guess the wheat market was the star of the day. I just wonder, was it a short-term, short-covering kind of rally into a big report day, or is it the start of finding some support from oversold conditions? I'm not sure.
Yeah, it's a good question. So it seems to have found some footing in the last couple of days. I wanted to suggest add to all of this activity. Tomorrow's first notice day for July contracts in grain, so we probably saw quite a bit of liquidation out of there, and a lot of the basis contracts come due. So farmers are having to decide. So we think that some of the pressure on the corn in particular here, we've been down in recent days. Part of that is farmers saying, I'm just not going to roll this anymore. So we saw that, if you might remember in March, Jesse, you saw that roll coming, or that first notice day. So farmers had to decide to roll, and it pressured March corn futures to the point where it's under $4 for a while. And we didn't see it as much in May, and that makes sense because farmers are in the field in May, and they didn't want to commit to that. Plus, they're a little bit more friendly maybe after the acreage number. But it looks to me like this, in part, first notice day of exiting long July contracts as well as deliveries were part of this as well, and reports and this and that and the other thing. So I also think that there's probably an element of managed money selling on 6 to 10 day outlooks that have just one after another have the entire Midwest above normal in rainfall. That's the last thing a lot of farmers need right now. But if you have a computer program that says, hey, rain forecasts it in late June and early July, that's a sell. And I think there's some of that. So we might find that, after tomorrow, the market springs back as it now concentrates more on weather and some of the concern. But sorry to be long-winded. You asked me about wheat, and I went everywhere else but wheat. Wheat probably just undervalued. It's been hit so hard. Not even a correction along the way as it dropped very significantly in the $2 range on most contracts.
I'm happy you went long-winded. You actually brought up a good point that I'll ask you a little bit more about here. Just with the fund management right now in these markets, and brought up some of the computer algorithms that trade, various data points that are plugged into the algorithm, so to speak. It's a lot of those computer algorithms. They've never seen a corn plant. They've never seen it inundated with floodwaters, things like that. So it feels like that a lot of that fund action algorithmic trade is maybe discounting some of the weather challenges. And to your point, just trading off what the longer range forecasts are showing right now. I know that overall, whatever's happening with that fund algo, not the friend of the producer, right, Brian?
Well, not in a downtrend, right? So when it's like the pile on, right? And so if the market is trending down, and it doesn't have to be a fund, it could be a speculator, it could be you or I. Let's say we sold a contract of corn a couple of months ago, and our account's showing gains, right? And the trend is still down. So we might say, well, we got some cushion here. Let's sell another, right? And so you get that selling that can occur in a downtrend. And then you have people who said, well, I think it's too low, I'm going to buy, and it doesn't work, and they might put a risk order, and then that order gets triggered. So that's another sell. I call it an unintended sell. Unintended as in that you didn't hope to get stopped out, but that's your risk order. So now you've got two types of sellers in there, one adding and then one getting out, and it just pressures the market. And then the signal to the buyer of corn, if you're a user of corn, the signal as well, it's falling apart. It's getting better and better for us, but we don't have to jump. So we'll just buy what we need today. and you get that just-in-time inventories approach. So that's the kind of the diagnosis of why prices sometimes go a lot faster and further than people may think.
So how do we manage emotions? How do we manage our marketing plan with added volatility going on in the market? And of course, end of the month, end of the quarter, USDA data dump on Friday. I mean, how do we take some emotion out of things, look at it objectively in that big picture perspective that you talk about quite a bit? How do we do that going into a volatile day on Friday?
Yeah, so it's a good question because, and yeah, I think the keyword you used is some of the emotion. You can't take all the emotion out of an environment like this. If you're a corn farmer and you're light on sales, this is kind of gut wrenching right now. And in particular, if you're in one of these areas that have been just inundated with moisture and rain and less, you're going to see big pockets where you have holes in fields and things like that. So the farmer already knows he's on the downslope of his crop production for the year. Unlike last year, everybody was concerned with dry, but a rain can cure that pretty quick, right? So you got maybe a little more hope, and then and it did for a lot of people. Timely rains last year were the key. Um, but I think you try and cope with emotion through strategy and putting forth action, and no plan, no strategy is going to be foolproof, but the trend is down right now. You and I talked for weeks on end about buying a put, selling a call, strategy that would be paper because it just didn't look like cash prices were offering what farmers want, but that was a way to defend the market. So
The USDA reports coming up on Friday. Grain stocks, acreage, a lot of data. What are some of the key numbers you're going to watch for, Brian?
well, obviously the acres, and historically corn acres have actually gone up a little bit on average on this report versus what was estimated or what the farmers told producers. So I would expect that to be the case this year. And bean acres maybe down a little bit. I think what I'll look for, though, if there's any surprises, might be in the quarterly stocks. I'm a little bit concerned they could be a little heavy on the soybeans. We just haven't exported as much. So those would be the numbers I look for that I would have concerns with. What I would also look for, though, when prices are hit down hard like this, a lot of times it's in front of reports. Reports comes out, and the selling interest is limited because now it's like, well, what new news do we have to focus on that could be negative? How much do I expect to make if I'm a seller? If I'm a trader, corn's priced at or below the cost of production in late June. I you might not be too expecting too much out of that new position. So I wouldn't be surprised if we start to see the end users pick this up. This is good value for this time of year. It's been kind of a gift to them, actually.
How about the livestock trade Thursday? Kind of a mixed bag in cattle and hogs. I know on the hog side, I got a quarterly hogs and pigs report that's out after the close of trade Thursday. Cattle's kind of waiting on cash activity, it looks like, again this week. Your thoughts on that protein sector, Brian?
Well, great question. Cattle, they've performed better in the cash market than expect, that I think not only us, but a lot of people were expecting. And maybe that's demand into the 4th of July weekend. So I would look for cash to probably start to soften pretty quickly. And that's why the board's kept a discount. Nonetheless, the board has moved up into new highs or close to new highs here over the last several sessions. So a big discrepancy there. Hogs and pigs, I think the whole world is kind of bracing for maybe a slightly slanted negative hogs and pigs number. Um, and that with current price levels, especially in those deferred contracts, really ought to start to suggest that the producers start to lean back a little bit on. They've had their foot on the pedal for a couple of years now. They've kind of dug a hole here, but the entire meat complex was showing red today, and even feeders down with corn down. We've seen a pretty good divergence with feeders and corn as of late. I think there's just a lot of caution in the cattle industry. We've circled back to this time and time again. These big interest rate cuts that were expected, core inflation, still waiting on those. Now, there's pretty good feel from the Fed that's going to happen, but still, locally, just FYI, Mercury Marine in Fond du Lac, Wisconsin, laying off 300 people. It's a luxury item, but it's a sign of the times where things will likely slow. So I like the meat complex and kind of concerned that hogs may not have quite found their bottom yet. Feeders, I think supply is limited. And then quickly over the milk market, a lot of volatility lately, but certainly there again, looking like demand can't hold $20 milk. And we see that in the cheese complex with cheese prices now trading. If you combine those, you're under 19 in the barrels, just over 19 in the blocks. That is not a recipe for $21 or $22 milk.
It definitely is not. Brian, any final thoughts for us? Anything you want to reiterate to producers listening in here today?
I think we'll kind of take the flip side and talk about people who buy grain and end users and buying. This is not the time to get complacent. There's a lot of growing season ahead. And the law of averages, you get really, wet, you're going to get really dry at some point. So if it's more immediate, these shallow rooted crops, I have farmer after farmer telling me I'm a little concerned about that. I'm more concerned about if we get, some of these summer storms with high wind. I'm not going to have the stalk and root strength to hold up. So I think the end user should get a little bit more in tune to how to shift that risk. Start looking at call options. Start buying physical. Farmers are going to be very reluctant sellers of cash at this price.
Great stuff as always, Brian. If folks want to reach out to you there at Total Farm Marketing and have a conversation, multiple ways to reach you, how can they get in touch with you?
800-334-9779, Jesse. That's our phone number. That's probably the best way. Or have an email address, Brian with a Y, at totalfarmmarketing.com, or got a great website, totalfarmmarketing.com. Check us out. Call in, ask. We're happy to help.
Brian Doherty with Total Farm Marketing. Always good to talk with you, sir. Thanks for being with us this week on Market Talk. Appreciate it.
Jesse, thank you very much. Have a great day.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@markettalkegg and hit the subscribe button. Or you can search for Market Talk Egg on YouTube.